Hey, welcome investors to the 40 Finance channel. I'm going to do this live stock analysis of Nvidia, which is a stock I think deserves a lot of respect and has made a ton of money for many investors over several quarters now. And over the long term, I don't think Nvidia is a bad investment at all. But what I'm seeing right now as far as the hoopla for Nvidia and some of the excitement for the potential of this company over the next year or so, I think the stock has just simply gotten ahead of itself. It doesn't mean that if you own Nvidia, you need to sell and run for the hills. What I'm going to show you today is just some fundamentals and some basics, as well as my own price forecast that just kind of insinuates maybe right now isn't the best time to buy Nvidia or start a new position, just because we are sort of looking at multiples that are well into the future at this point. So let's jump in here. First thing we're going to bring up is this technicals chart. So we'll skip right ahead. This is all based on the assumption here, Nvidia, such a large cap stock. You guys know, you've done your research on Nvidia, you know what the company does, what their markets are. We're just going to look strictly at fundamentals today. And this is a year to date. Let me just adjust it here. This is the year-to-date technicals view. So you have in the blue line the 50-day, orange is 200-day, and then RSI at the bottom. And what we see very obviously is that at 223, which is today's price, you are significantly over the 50-day moving average. Arguably, you were at that point on July 6th. And the stock went down a little bit. Then we had the most latest earnings report, and you've bounced back up. RSI at 70. In July, it was a little hotter at about 82 is what it looks like here. So there's not a lot on this chart that says that this is a buy the dip opportunity for Nvidia by any stretch of the imagination. And that's what we would just want to be careful for. If you wanted to start a new position because you're hearing all this press about Nvidia, and you might be saying to yourself, holy cow, I need to get in now. Now, let's go over, I need to do a quick camera adjustment here. Let's take a look at some of the historical fundamentals, and I'm just going to set this up for you. Bear with me. All right. Now, I do this a lot on my videos. I like to look at historical valuations and price multiples so that we can get a feel for what has Nvidia traded for in the past, right? Right here in this market today, we know that valuations and forward multiples are higher than we've seen really over the past 2 or 3 years. Some of that last year was because there was unexpected EPS gains, right? The market came down to a low because nobody knew what was going to happen in the pandemic. And so there was a lot of analysts and a lot of street opinion that was confused, like, hey, whether it was Nvidia or Walmart, like, what will these earnings be in the future? We really can't tell. And then as we started to get into July, August, even before that, the earnings estimates continue to go up. Now I would argue here, as we end into the back quarter of 2021, I would say that analysts and the street have gotten a little bit better at predicting where companies will land for the year. Plus, we also have the added benefit that companies are providing guidance once again. Don't forget, last year we were flying blind. No company offered any guidance. They came out and they said, with the pandemic, we don't know what sales are going to be. Now we sort of do. So that's where historical valuations come into play, is we can get a feel for how they used to play out. And we know that compared to 2020, we're in much more, let's just say, estimated time, our estimates are a lot more accurate today than they were at this time last year. All right, so getting ahead, we look at forward PEs on an annual basis, right? I don't use a lot of trailing metrics. I'm always trying to use forward information. Our forward PE, at least on Yahoo, is 55. That compares to January of 21 at 46, and January of 20, we can kind of throw this one out because we don't know how much pandemic news was involved here. Then you go back to, let's just call it more normal times, and you are anywhere between a 22 and a 48. All right, so any way you slice it, 54 on an annual basis is a lot higher than we've seen out of Nvidia. Now, recent past, switch to a quarterly view, 54 compared to the last several quarters. If you went back to July of 2020, you did have a 54, basically, if you round it up a little bit. But you're definitely at the top of the multiple that you're paying for Nvidia's forward price to earnings. Now, price to sales, we'll talk forward price to sales in a second. Yahoo only does trailing 12 months. So trailing 12 months, pick your flavor if you like that one or not, but we're at a 25x on what they've put in the books in the last 12 months. You go back to July, it was about the same. You go back a few other quarters, and it's arguably higher. Again, back in October of 2020, you're close to 24. Let's look at the annual view. 25x, we already talked about. You go back several years in the past, and outside of January of this year, if I'm looking at that right, outside of January of this year, NVIDIA's never been higher. Now, what does that say? Well, it says two things. It says my version, which is NVIDIA's multiple is trading much higher. Should we be careful? But let's take the other view. Obviously, if I'm wrong, is the multiple of 25x, the street could be saying, actually, we believe that NVIDIA will have more revenue and more earnings in the future than what analysts are projecting, okay? So that is the other look. I don't want to preach like I know it all, right? Because I don't. But what we're trading at today is a significant over expectation or significant expectation that they will beat earnings and revenue. So we'll figure that out when I do my price calculations. All right, next thing I'm going to show you, because they do a really good job on Seeking Alpha. Let me make sure this view is good for you guys. I go down to this table view. This is EPS estimates. This is where we can start to look ahead in fiscal years to see EPS estimates if they were to hit. Now, this estimate is a consensus estimate, all right? So that means the analysts that picked low and the analysts that pick high, they kind of screw things up for everybody else that we're picking right in the middle. But we have some feedback, right? So January of 2022, the way NVIDIA's fiscal calendar works, they go from the end of January, they go from February 1 to January 31st. So all of their fiscal years are in the future. So this fiscal year right now, as we sit here in August of 2021, that's NVIDIA's 2022 fiscal calendar. Hopefully that makes sense. Really doesn't matter. You just got to keep track of the year. When you're making your predictions and stuff, you got to keep track of what year you're using because they're running a little bit further ahead than most companies. Consensus estimate 416. All right, low of 399, high of 5. That would come out approximately February of 2022, and that would put forward PE at 52. Yahoo had 55. This would bring it down a little bit to 52 because it would include the rest of the fiscal year. Now looking ahead to Jan 23, and the reason that this number is important is because when we get to February of 2022, analysts are going to start using the 2023 earnings and sales forecast to kind of build the valuation on the street, right? What we're looking at right now is a short-term valuation that probably fizzles out as we cross into the calendar year. Okay, so once we get to their earnings in February, when they have that call, people are not going to be using the same metrics anymore because those will be in the past and we'll start to look at new ones. All right, so with that in mind, January 2023 is an important number. EPS estimate right here today, 459. All right, we got a low of 4, high of 550. Number of analysts reporting, 40. Good news. Now, if we got to that point and it's, analysts remain at this 459 consensus, aka they don't change prior to this February's call, that would put you at a forward PE projection of about 48. Let's go down to revenue, because this is where I think on the revenue side, arguably more accurate for Nvidia to do revenue, just because, especially with some of their acquisitions, if ARM goes through, EPS could definitely take a 1-year hit. I don't know all the details, the financial details of the ARM deal, but what could potentially happen there is they have to buy the company, right? First, it has to be approved, then they actually have to pay for it. And so when they pay for it, you could see a hit on earnings across, 1 or 2 years as they kind of work that out. Now, so we'll focus on revenue for this portion, which takes out the potential cost of the ARM acquisition and just talks about how many chips are they selling, and how many places. So Jan 22, again, we wouldn't know this number until Feb 22. Right now, 25.76 billion is the estimate. Year-over-year growth, plus 54%, spectacular, particularly for such a big company. I'm sure there's a little bit of COVID comp in there that boosts it a little bit. Forward price to sales of 21. All right, low estimate about 25 billion, high estimate 26 billion. Plenty of analysts on here to get a good average. I can tell you that this number, I went through it. I'm not going to bore you. We'll get to my projection in a second. There's no way that this number, for example, reaches like 30 billion. It just doesn't happen. Okay, not because Nvidia sucks. It's just like we're talking billions of dollars. So unlike a small cap stock that could reasonably go from 500 million in sales to 700 million in sales, and that would be great, this $27 billion is about all you're going to get out of Nvidia, minus some sort of just unpredictable event happening. More importantly, though, we need to talk about 2023, because that's where my price forecast comes in. You got 29 billion-ish on the estimate. Revenue growth, 12%. You see what's happening here, okay? Double-digit revenue growth is awesome, absolutely fantastic. Probably does not factor in ARM, whatever efficiencies would be there, because that's not approved yet. And what would happen with going from plus 54 to plus 12% revenue growth, you could see a weakening of the multiple. All right, so multiple is high right now. When growth slows, multiple comes down. Again, not ragging on Nvidia, I'm just calling it like I see it. If this were to happen at 28.8, if that's where analysts believe after this fiscal year closes, you'd be at 18.87 forward price to sales. This is a little bit better, okay? This is a little bit better than what we've seen historically. Today we're at 25x on the trailing metric. This at least gets you to 18.19. So right off the bat, I would say if you bought Nvidia today and you said to yourself, there is no way in heckfire that I am going to sell this stock prior to January or February of 2023, you're probably okay, right? You're probably okay and you're probably going to make some money. But I'm talking about February of next year, just a few months away. That's what this video is about. It's not about a 10-year look. It's about the short term. Do I buy Nvidia today as a new investor to max return my portfolio up into February of 2023 or 2022? Sorry, get my own years confused. All right, so that's that look. Let's do one last source here. We got our TipRanks. Big fan of TipRanks. My affiliate link's in the description if you're interested in learning more. Where are we at? Okay. So here's all of our analysts. I always look at the best performing analysts. I cut out the guys that have a poor track record, aka 1-star, 2-star, 3-star analysts. That's the benefit of TipRanks. You can sort the noise because there's nothing that's stopping me, right, from populating some sort of projection into a Seeking Alpha or a TipRanks, and then I'm just not of the same caliber. But I do it for your entertainment. Hopefully you like it. All right. 6 days ago, 7 days ago, you get the gist. You got buys across the board. Price targets, 230, 240, 225, 230. Pretty much how many people came in here? I think no matter how you slice it, you did get a 300 here. No matter how you slice it, your average, let's just say, is 240, just for argument's sake. So that's what analysts are saying right now for Nvidia, but there's a catch. These projections, if the analysts submitted them with the right time frame in mind, these projections are for 12 months. 12 months from today, right? August 2022. So right off the bat, Nvidia, I'm looking at the ticker, 224 right now. Analysts are saying roughly 235, 240, 12 months from now. It's not a great return unless you bought Nvidia at whatever, $75, $80, $100. Then you're kicking butt. But we're talking about, should you buy it right now? All right, so let me get to my projection right here. Current price, it's actually went up from here, but it's going to screw up my metrics if I change it. It's right now, it's 224 and change. When I did this math, it was 221. EPS projection, I gave it a small bump because I think it'll still come out. This is what analyst consensus is, $4. Forward price to earnings today, about 55. Revenue projection today, this is analyst, this isn't me, 25 billion. Forward price to sales, 21x. I think honestly, this will probably be more like 26 billion-ish, and forward price to sales probably in that 20 or 19 place. Here's what I figure in February of 2022 when they do their earnings call closing out their 2022 fiscal year. I think by that point, we'll be looking ahead to 2023. I think the EPS projection for that time period will raise to 480. And I think the revenue projection for 2023 will be about $27 billion, maybe 28. Really hard to tell, but it's going to be in this neighborhood. That would be roughly $11 a share. I cannot see forward price to sales much over 18, just for the long haul. And so if you do the math on that, the price that I got is flat. Actually, it's $4 less than we're showing today. Now, what does that mean? You know, first of all, this is a guy on YouTube making price projections, right? So that's the first thing to keep in mind. What does it mean, though, if we think about owning Nvidia stock today and me projecting $5, off a few months from now? I think what you're going to see is that Nvidia stock will have its slumps and it'll work its way back up. So you saw the title of the video. I think Nvidia is at or near its top right now. Might be some short-term appreciation. I mean, heck, it went up $4 already since I did my math, so I'm obviously wrong there. But I think it can't stay. This is not a sustainable level, and there will be other buying opportunities. When you take my price target of 220, you're using like a fundamental price target, right? You're not using technicals, you're not calculating momentum, you're going off historical to predict the future with a little bit of like my own insight in there. So you can use my price target at 220 to give yourself sort of the concept of where you want your returns to be, right? So it's, let's just say every stock in your portfolio has to gain 20%, all right? Like that's your thing. Like whatever I buy today, I want it to return 20% by Feb 1. No problem. You just take my 220, and whatever your opinion is of the 220. Maybe you think that's too low and you factor it up, but you minus 20% from it, right? So that gives you roughly 40, let's just say 220 minus 40. That's 180. So around $180. If and when you see that from Nvidia, you could feel good buying it with the expectation that the fundamental value of it at 220 is a decent shot for February. So that's how, when I make these, I wanted to do one live. I wanted to talk it out because some people get confused on what does my price target mean. First of all, it's just a calculation, and I am not a genie in a bottle. So it's just me looking at fundamentals and going from there. So awesome. I'm going to just peek at the questions, see if anybody jumped on. Black Andrew says, Nvidia does look too pricey. I agree. Are there any other companies like Nvidia that might be a buy still? Question from Black Andrew. And I can't bring this up because it's in a separate file, but I was looking ahead to Morningstar just out of curiosity for the fair value of Nvidia, and it was 138 as of July 20th. So, or excuse me, nope, July 20th, sorry. So they had 138 as the fair value. It's probably went up a little bit because they've had a quarterly earnings report since then, but let's just pretend it's 150. So you're still way over. On that same time, July 28th, AMD had a fair value of 109. Let me see what AMD is trading at today. AMD is a good one that kind of fizzles out at certain points. They're trading at 108. So if you wanted to go fair value by itself, maybe you make a couple bucks off AMD. Intel, Morningstar loves Intel, all right? If you want to buy it for the long term, they have a fair value at 60 plus, mostly because of what Intel makes. They are a manufacturer, okay? They have the opportunity to make their actual parts. So that's where they get a lot of a love from analysts and sites like Morningstar. All right, let's see what the next question is here. Kevin Hawthorne, good morning. Always good to see you. Derek Ridlin says 4 letters, INTC. He's way into Intel. At least that's what his comments suggest here recently. So, if you're in the same camp as Derek, I would say at this point you are committing yourself to 3 to 5 years, which honestly we should all do when we're investing. It's so hard, and I fall in the same boat. It's so hard with real-time news about stocks to hold stocks for 3 to 5 years. But I think that's what you're trying to do with Intel if you see it as a good value right now, which Morningstar is definitely saying. Upstart and Doximity have 300 PEs. Nvidia, this is DH by the way, Upstart and Doximity have 300 PEs. Nvidia is better than Tesla, which also has a 300 PE. Nvidia's PE is cheap compared to those others. I would agree that I would take Nvidia over Upstart. I don't know about Doximity. Nothing wrong with Upstart at all. It's just, to me, it's an unproven commodity. I know what the plan is for them to keep moving their AI software out to bigger and bigger banks. It's too early for me. It's too early for me at $200 or whatever. So I'd buy Nvidia over Upstart for the long term. I personally would buy Nvidia over Tesla for the long term, particularly because Nvidia's in that self-driving space with their chips in automobile. Small piece of their revenue right now, but it could be an intriguing way to play self-driving without having to pick a car manufacturer. But everyone, of course, has their own opinion. Smith is asking about ASML. I'm not going to look at it on this one. Snaps, roughly overpriced as well. 49's fine. It's good to see you. What's up? Long time. He's back. Nvidia is overpriced right now. He did, however, buy another share of Amazon at 3,200, holding long term. I am with 49's fine because $3,200 for Amazon, multiple opportunities. We've all had to get there between 3,000 and 32. How many of those opportunities are left? I have a price target of 4,200. I'm not the only one. We'll see what happens, but I guarantee you I never wake up in the middle of the night worried about my Amazon stock, ever. So anyway, Mr. Mughal, have a good day. I appreciate it. And thanks to you, everyone, for coming out and seeing this. This was a live stock analysis. I obviously record most of these, and so I thought I'd come out and do one live, try to pick up the pace a little bit and get to the point. So hopefully you liked it. Please give a like, subscribe to the channel if you're new, and we'll see you on the next video.